As of the latest market data available, SoundHound AI, trading under the ticker SOUND, is currently priced at $18.50, reflecting an intraday gain of approximately 3.61%. This upward movement is part of a broader, volatile trend that has characterized the stock for much of the past year. While many investors see this as a pure play on the explosive growth of conversational artificial intelligence, the reality of the company's financial health presents a far more complex and cautionary tale. The common perception is that SoundHound AI is on a clear path to dominating the voice AI market, especially with high-profile partnerships in the automotive and restaurant industries. However, a deeper look into its financials reveals a persistent struggle for profitability that the market seems to be conveniently overlooking. This disconnect between the narrative and the numbers is where the true risk and potential opportunity lie for those willing to look beyond the surface-level hype. The expectation is that of a high-growth tech company, but the reality is a business that is burning through cash at an alarming rate, a detail that seems lost in the excitement over its technology. The recent price action for SoundHound AI has been a roller coaster, attracting traders who thrive on volatility. We've seen significant daily swings, with trading volumes often exceeding the average, indicating a high level of interest from both retail and institutional investors. A look at the order books on platforms like Interactive Brokers and Fidelity reveals a constant battle between buyers and sellers, creating the choppy price action we've witnessed. The stock's performance has been highly sensitive to broader market sentiment, particularly concerning technology and AI stocks like Nvidia stock and Apple stock. When the Nasdaq shows strength, SOUND tends to amplify those gains, but it is also susceptible to steeper declines during market downturns. This high beta is a double-edged sword for investors. On one hand, it offers the potential for substantial short-term gains for those with a high risk tolerance. On the other, it exposes long-term investors to significant drawdowns that can be difficult to stomach. The recent insider selling by several key executives, while explained away as pre-scheduled trades, has done little to assuage the concerns of more cautious market participants. Many are now closely watching institutional activity, looking for signs of either accumulation or distribution by larger players, which could provide a clue as to the stock's future direction. For those engaged in self-investing, it is crucial to understand that while the narrative is compelling, the stock's movement is currently driven more by speculation and market sentiment than by solid financial performance. Now, let's turn our attention to the core of the company, its financial statements, which paint a very different picture from the one suggested by its soaring stock price. A thorough examination of SoundHound AI's income statement reveals a company with impressive revenue growth, but this growth has come at a significant cost. In the most recent quarter, the company reported total revenue of $42.68 million, a substantial increase from the previous quarter. However, the net income for the same period was a staggering loss of minus $74.72 million. This trend of growing revenues accompanied by even larger losses is a major red flag. While it's not uncommon for technology companies in a high-growth phase to be unprofitable, the magnitude of SoundHound's losses relative to its revenue is concerning. The cost of goods sold and operating expenses have been scaling up rapidly, indicating that the company is spending heavily to achieve its top-line growth. This raises questions about the long-term sustainability of its business model. For an investment to be viable in the long run, there must be a clear path to profitability, and at present that path for SoundHound AI is murky at best. Investors using platforms like SoFi Invest or Robinhood, who may be attracted to the stock's exciting story, need to look beyond the top-line numbers and consider the bottom-line reality. The balance sheet further complicates the picture. While the company has managed to raise capital, its cash burn rate is a significant concern. A look at the cash flow statement shows that cash from operations has been consistently negative. In the trailing 12 months, cash from operations was a negative $108.88 million. The company has been reliant on financing activities, such as stock offerings, to fund its operations. This dependence on external funding makes the company vulnerable to shifts in market sentiment. If the appetite for speculative tech stocks wanes, SoundHound AI could find it difficult and expensive to raise the capital it needs to continue operating. The debt-to-equity ratio, while not excessively high at the moment, is something that needs to be monitored closely, especially if the company continues to burn through cash at its current rate. For anyone considering an investment in SoundHound AI, a thorough analysis of its financial health is not just recommended, it's essential. The numbers suggest a high-risk, high-reward proposition, and investors need to be fully aware of the potential downsides before committing their capital. The use of Schwab Intelligent Portfolios or other robo-advisory services might help in diversifying such risks, but a direct investment in a single volatile stock like SoundHound requires a deep understanding of its financial underpinnings. At its core, SoundHound AI is a company that specializes in voice AI and conversational intelligence technologies. Its main offering is the Houndify platform, which allows businesses to integrate voice and conversational AI into their products and services. The company's technology is used in a variety of applications, from in-car voice assistants to voice-enabled ordering systems in restaurants. The business model is primarily based on licensing its technology to other companies. This B2B focus is a key differentiator from consumer-facing voice assistants like Amazon's Alexa or Apple's Siri. SoundHound's strategy is to provide the underlying technology that powers the voice experiences in a wide range of products without necessarily having its own consumer brand at the forefront. This approach has allowed the company to secure partnerships with major players in the automotive and hospitality industries. The potential market for conversational AI is vast, and SoundHound is well positioned to capture a share of this growing market. However, the company faces stiff competition from tech giants with deep pockets and extensive resources. The success of its business model will ultimately depend on its ability to continue innovating and providing a superior technology that can compete with the offerings of much larger and more established companies. Looking ahead, the future of SoundHound AI is fraught with both significant opportunities and substantial risks. The bull case for the stock rests on the continued adoption of conversational AI across various industries. As more and more devices become voice-enabled, the demand for SoundHound's technology could grow exponentially. The company's focus on enterprise solutions could also be a key advantage, as it allows for deeper integration and more customized solutions than what is typically offered in the consumer market. If SoundHound can successfully scale its operations and eventually achieve profitability, the stock could deliver substantial returns for early investors. The recent partnerships with major brands are a positive sign, but it is still too early to say whether these will translate into long-term profitable relationships. On the other hand, the bear case for SoundHound AI is equally compelling. The company's lack of profitability and high cash burn rate are major concerns. The competitive landscape is also a significant threat. Tech giants like Google, Amazon, and Apple are all investing heavily in their own voice AI technologies, and they have the resources to outspend and out-innovate smaller players like SoundHound. There is also the risk that the market's enthusiasm for AI stocks would cool, which would put downward pressure on SoundHound's valuation regardless of its underlying performance. For those considering an investment, it is crucial to weigh these potential risks against the potential rewards. Comment below with your thoughts on whether SoundHound AI can overcome its profitability challenges and compete effectively with the tech giants in the long run. In conclusion, the story of SoundHound AI is a classic example of the tension between market expectations and financial reality. The market is pricing the stock as if its future success is a foregone conclusion, captivated by the narrative of a disruptive technology in a high-growth sector. However, a sober analysis of the company's financials reveals a much more precarious situation. The company is in a race against time to achieve profitability before it burns through its cash reserves or the market's patience runs out. While the potential for success is undeniable, the risks are equally significant. Investors who are drawn to the allure of high-growth tech stocks must be prepared for a volatile ride and the possibility of substantial losses. A thorough due diligence process, including a deep dive into the company's financial statements, is absolutely essential before making any investment decisions. The ultimate trajectory of SoundHound AI stock will depend not on the hype and the narrative, but on the company's ability to execute on its vision and deliver tangible financial results. The expectation of a smooth ascent to market dominance is a far cry from the reality of a company navigating a highly competitive landscape with a challenging financial profile.